This conference will now be recorded.
Hi there, welcome to LAT's Weekly Market Insights. Today we're going to be talking about inflation, as we had a pretty large piece of macroeconomic data out this week from the US regarding their inflation. I've got a table up here at the moment. You can see multiple macroeconomic datas from many countries. The column that we're going to be focusing on today would be the inflation rate. Generally, the main role of a central bank of a country, in the US, it's their US Fed. Um, in the United Kingdom, we have the Bank of England, is to use whichever tools they have with regards to monetary policy in order to try and target a 2% inflation rate. As you can clearly see here, from the United States, the Eurozone, and the United Kingdom, we're well off it. Okay, hence, you would have heard in the news inflation hits highs and so on and so forth. Generally, what that would mean is a devaluing of a currency. Okay, devaluing of a currency. Couple of reasons, really. Generally, the buying power of a currency becomes weaker as there's inflation. So against other currencies, it's going to devalue. Also, what you'll notice with the countries that have high inflation is that the price of goods go up in order to counter said inflation. If the price of goods go up, you become less competitive to export essentially, and so that will have a knock-on effect on one's economy, and therefore generally you also see a devaluing of the currency. So on the back of that, with the inflation data out from the US this week, there was opportunity due to the volatility in the markets. Whenever there's opportunity to make money, please remember there's always opportunity to lose money. Okay, so trading with stop losses, trading with correct risk management, always suggested. So instead of looking at the US dollar, which is an option to have traded during the inflation data, I'm going to look at the Russell 2000. Now, essentially, there is a group of majority, 97%, I think, of the US companies are enlisted on something called the Russell 3000, 3,000 US companies. And the Russell 2000 is the bottom 2,000 of said companies. So the smallest companies in the US, essentially. So you could trade the Dow Jones, which is the top 30. You could trade the S&P 500, top 500 in the US, the NASDAQ, which is the top 100 tech, but here we're looking at the Russell. And it's interesting because what you'll often find is that a country's index, the value of its company, so to speak, would essentially be inversely correlated to its currency. So what we saw was pretty poor inflation data out of the US this week, and we saw the US dollar, if I show you very briefly here on dollar yen, for instance, a US dollar sell off. So it weakened. So there was an opportunity to trade that move. Here, for instance, okay, through that level, support, there was our data. The market dropped straight through it, and that would have been a pleasant target down to these lows here, and obviously moved quite quickly as well. But instead of taking that option, I'm just trying to look at an alternative, and the alternative were obviously the US indices, but to the other side, flip side, so the upside. And here we could see the Russell 2000. Okay, this was the data here. So you can see it around about 1:30. The data came out a couple of days ago. And if I actually pop it onto the 15-minute chart, it looks something like this. So when we're trying to trade data, if you want to trade data, you use something called a straddle. So you're going to try maybe go one way should it come out this way, or another way should it come out high or lower. This is the idea. So through that level would have been your potential buy, and through something like that, or indeed right down the bottom if you wished, but I'd probably say something like that for your potential sell. Now you'd have targets in place as well. Probably a pretty reasonable target would have been a target one there. Okay, so the option would have been to have bought through this should we have weak inflation data, therefore weak US dollar, therefore inversely correlated Russell 2000 should go up as we saw. So a buy through here, stop loss, always trade at stop loss behind these lows here. So it would have looked something like that. Your straddle on the Russell, should the data have come out poor, which it did, of course, and straight up to that target there, which did show it was relevant. Okay, we failed at that level. We then broke it and retested it and reconfirmed it as now a level of support. Now, the reason I'm looking at the Russell was because there was opportunity to maybe take this further, i.e., this was the catalyst to continue a much larger, if we have a look here in the 4-hour chart, a much larger upward move, upward trend. So 14th of July, if we take it all the way down to the bottom, 16th of June, this move, yeah, but I'd probably take it from somewhere like this, where we started a clear higher highs, higher lows, higher highs, higher lows. So essentially we're looking potentially as this being the new, this pullback being the new higher low. You could check it with a Fibonacci retracement, something like that. I'm actually going to discount this big spike here because again, fundamentally caused wick, and you can remove that from your technical analysis because we know it's fundamentally caused. It wasn't indicative of the actual market technically. So pop that in here and you'll see we retraced perfectly back to the 61.8 retracement. Very good retracement, ideal spot for a higher low in an uptrend. We then need a catalyst to take us up. Now, T1, the initial target we spoke about, was this high, which was achieved. There's a potential T2, and that was the big 2000 psychological round number. A lot of analysts were thinking, right, we make our way up here, we pull back, we then make our way to this big 2000. We just needed the catalyst, and the catalyst came in the form of the poor inflation data, as we can clearly see. So if you had a T1 there, you could take profits here, but if you were going to be audacious enough to maybe take this further up to the big 2000 level, this was actually a realistic, viable option, which was something like that. And on the inflation data, using the slightly larger analysis, the fact that it was big data, so should be market moving, just shy of interest rates really is inflation data in terms of relevance. And so here we had really poor data, inverse correlated to the US dollar, so we're looking bullish, went straight through that target, broke it, retested it, and off we went. If you wanted to, like I said, you could have taken profit at target one, and you could have looked to have re-entered after the retest. So taken profit here and then look for a follow-up trade to take us up to the 2000, or you could have held the original position all the way to 2000 for a 10 to 1 actually, which is quite big. I mean, I normally would be targeting something like 1.3s or 1.4 to 1s, but with such strong data going with the big trend since June, going with the big trend, the perfect pullback on the 61.8 on that 4-hour chart, there are plenty of things suggesting that this market had more than just this T1. And a lot of analysts and a lot of people would have possibly taken this up to the big 2000 psychological round number, where, as you would expect, we did find resistance, psychological round numbers. Okie doke. Cool. Just a little bit of insight into how one could trade inflation data. Obviously rather relevant, especially considering the data next week. Okay, looking ahead to next week, you can see here we have UK inflation data Wednesday, 7 a.m. next week. So be aware of that. We just saw the moves in the US with the dollar and the stock market. So of course, all eyes will be on sterling and the FTSE on Wednesday morning. Before that, we have Canadian CPI data on Tuesday afternoon. Big interest rate decision here in New Zealand. Early doors Wednesday morning, obviously. They start things a bit sooner than we do. Early doors, 3 a.m. You get the interest rate decision out of New Zealand on Wednesday morning. Then have UK inflation Wednesday morning, and that's pretty much about it. We've got a bit of Aussie data, a bit of FOMC Fed minutes coming out, but other than that, the main things to look out for: Canadian inflation data, New Zealand interest rate decision, and all important UK inflation data. Okay, so just a little insight into how it could be traded. The currency, or indeed the index, have levels to sell through and to buy through, or to sell through, to trade through, and to trade to. Have some levels in place as well. Always have a relevant stop loss as well. Always risk what you're willing to lose, no more. And try and go with the trend. I mean, here's a great example of that data in line with this trend, and it has taken us to where one expected it, the big 2000 round number. So have a relevant entry, stop, target. Use the data as the catalyst that should get you there. Trade with stop losses, and we'll see where we are at the end of next week on the back of the inflation data out of the UK Wednesday morning. Remember that. Cool. Right, everyone. Have a lovely day. Hope you had a lovely week, a lovely trading week. Enjoy the weekend. Relax. If you do trade during the week, please relax this weekend. We're going to get some hot weather. Try and enjoy it, and we'll be back and ready to go early Monday morning. Cool. Take care all. Bye for now.